We are very gratified at what has happened here. To get BlackRock involved, we gained our first exposure in Bitcoin, gave our clients their first exposure in 2015 when it was $250. And back then, BlackRock, all of the major asset manager platforms and providers, they thought this was a joke. They thought we had just started ARK in 2014. And so when we put Bitcoin in our portfolios in 2015, they actually made fun of us, saying, oh, okay, this is a marketing gimmick. They're just trying to get attention. And so that's what life was like for the first, I'm going to say, 6 years. And then 2-3 years ago, they began to understand, wait a minute, this could be a new asset class. And when BlackRock struck its deal with Coinbase, even while the US regulators were saying, no, this is just for criminal activity. Once we saw BlackRock strike the deal with Coinbase, we knew that this was the time. So 2 to 3 years ago, more and more asset managers started thinking seriously about this new asset class because they had to. It wasn't acting like any other asset class. And anyone with a fiduciary responsibility has to look at a new asset class with very low correlations to other assets for their clients. And so they had to study it. Another thing happened in 2018. Cambridge Associates, which is a major consultant to endowments and foundations, it was the first consultant to come out and say, you know what? You all may not like this newfangled thing, but it is behaving differently from other asset classes. So you at least should take a point of view and understand why you don't like it. So I think that's when some institutions started studying it seriously. A couple of things going on there. First, there were 11 spot Bitcoin ETFs approved at the same time in the US on January 11th. And we had a bit of a sell on the news, but as more and more people, investors, advisors, asset allocators understand that this really is a new asset class and there's scarcity value now associated with it, and they believe that, I think we're seeing a movement in. Now, what's interesting about that is not one of the major platforms like Morgan Stanley or UBS has approved these in the US. So they're not the buyers right now. It's more the independent advisors and retail investors who are moving the needle. The other thing that's going on, and this may not be so obvious in Europe right now, is we're having another phase of what is the regional bank crisis here in the US. A few banks are having to raise money. The New York Community Bank, so you know very well, very good. Yeah. and it seems that, this happened the same time last year. It seems like March. This time in March is always an interesting time. Yeah. Yes. And so last year, I think many people in our industry were astonished to see regional banks implode. A lot of the stocks were down 50, 60%. And Bitcoin, same time, was up more than 40%. And so there's nothing like price signals to get investors' attention. So this was the first time they were able to see that not only is Bitcoin a risk-on asset, but it could also be a risk-off asset. Yeah. No counterparty risk, flight to safety. We have been taking profits in, as you can see from our trading every day, in a name like Coinbase, because we think there could be a little bit of a settling out in Bitcoin to the benefit of other crypto assets. And of course, Coinbase is exposed to all of them, but seems to be more moved by the movements in Bitcoin. So we think while these platforms, the ones I mentioned, evaluate the various ETFs and, do all of their due diligence, We could see a little bit of marking of time here. Depends. If we have another regional bank crisis, I think Bitcoin could continue to go up. But if not, then I think the next big move up is when the platforms start moving in. We call them wirehouses here. You call them intermediaries there.
I see.
Yes, so the Morgan Stanleys and the UBS.
Okay.
Forth. They will need, some need 3 months, some need a full year to watch execution, which ETFs will win. They don't want to commit to an ETF that is going to discontinue Bitcoin if it doesn't have enough in the way of assets. Yes, it is interesting as we are going out and educating advisors and different intermediaries about Bitcoin. We're talking about the halving and our experience with halving in the past, a positive for Bitcoin, with time. So I think April, which is 3 months after launch, could be a time for one of the intermediaries or platforms, as I call them, to commit, because they will want to be there. The halving, our experiences and the facts are that it doesn't increase Bitcoin's price right away, but with time it does, especially because this time, with the halving, the rate of supply growth of Bitcoin will drop from roughly 1.9% to 0.9%. And that will be the first time that the supply growth in Bitcoin will drop below the very long-term supply growth of gold.
Interesting.
And many people are beginning to understand the difference between Bitcoin and gold. When the gold price shoots up, then supply growth actually is faster. That cannot happen with Bitcoin. And so they're understanding the difference. And I think the light bulb is going on for some investors. Yes, we're in talks with all of them, and we have been for some time. What I like about the discussions is they are going deeply into our infrastructure, our operations, and they're doing their homework. They're very serious about this. And so that's good news. We have been very happy with the launch. We are number 3, BlackRock, Fidelity, then ARK 21 shares. I think we've just hit $2.4 billion. So quite, in roughly 6 weeks, it's quite a successful launch, almost 2 months now. 21 shares, I've known them for a while. I met one of the founders, Ophelia Snyder, at an ETF confab in 2019. And for full disclosure, I've been on their board for several years. And I wanted to get to know them better. I saw that they had 40 different funds, and they had been through many markets in their 5 years, booms, busts, halvings, forks. And so they had gotten through that. Their infrastructure and operations had been battle tested. We didn't have that infrastructure. It's not what we do. And so we thought it would be a great partnership, and it has been a great partnership. I think many people in the US are surprised that we are number 3 because there are other much bigger asset managers like Invesco and Franklin and Wisdom. They're much bigger. And so many people assumed that there would be 3 big winners, and we're one of them. They're quite surprised about it. ARK stands for disruptive innovation, ARK Invest. So we have put out research on Bitcoin since our founding. Our first paper was a blog in 2014. And then we put out a white paper in 2015 called Bitcoin. Could Bitcoin serve the 3 roles of money? So means of exchange, store of value, unit of account. We did that in collaboration with a very well-known economist, Art Laffer. He collaborated with us on that paper. And the reason he did was after he read the paper, he said, wait a minute, this is what I have been waiting for since the US closed the gold window in 1971. So 50 years. I've been waiting for this for 50 years. This is a rules-based monetary system, and it's a global monetary system. And it's decentralized with no government oversight, no human decision makers. I love this. And so, to have a famous economist, and here for full disclosure, he was my professor at the University of Southern California in the day. He's been extremely influential in my career, and he is a friend, but he has never put his name on a paper like this. And many people approached him about digital cash in the 1990s. He never put his name. This is the real deal. So, and then in 2016, we put out another white paper in collaboration with Coinbase. Coinbase was only at its Series B funding at that time. And the name of that paper was Bitcoin, ringing the bell for a new asset class. So I think many investors know, know what we're talking about. Number one. Number two, we partnered with ops provider that has been tested. And number three, and this is also extremely important, we have been training our distributor since 2016, Bitcoin. And so we have wholesalers and salespeople who really understand Bitcoin.